Hey everyone, welcome back. It's Rob Brayton with Perfect Spiral Capital. Hope you're doing well. Today we're going to be looking at a little bit different topic from some of the other ones that we've done recently. We're going to be looking at what is banking, and we're going to be taking a look into maybe thinking like a banker and how our thinking needs to evolve and change. So I have a couple of different things prepared that we're going to walk through today. But I think it's important that we really examine our mindset and we start to think about what does it really mean to be a bank? So why don't we dig in? Let's take a closer look and let's find out more about what it means to understand banking and our thinking so that we can think more like a banker. First of all, what is banking? And I'm not talking simply about your checking and savings account. I think most people understand what those types of things are. What I'm talking about is, let's talk about the real definitions of banking. So the Cambridge Dictionary says that the business of operating a bank is what banking is. Well, I mean, that seems kind of general, right? It doesn't really examine or answer our question necessarily. However, banking, if we think about it a little differently, is money movement. It's movement of money in some way, shape, or form. So when you put money into a bank doesn't typically just leave that money there in your accounts. It's actually being utilized. So Nelson Nash actually had a really good definition of what banking is that I think is important for us to take a look at. And Nelson's definition was that someone or some organization that has control of a pool of money that can and must flow at a cost to meet some need. So that's a little different type of definition than maybe what you or I have heard or are familiar with. That being said, I think it's really important that we take a look at what the bank typically does with money when a person puts money there. But let's imagine there's you. You make money and you have a place or need a place to be able to store that money securely until it's ready to be used. Well, you're typically going to find a bank that you trust. You're going to move or put your money into there once you receive your paychecks. And from there, you typically need stuff. And that stuff comes at a cost. And if you're like most average Americans, we usually don't save up enough for that stuff. Where do we go for that money? Well, we've already deposited money in the bank, much like other people. And the bank has capital reserves. And they say, let's put this money to use. And we'll do so at a cost, like Nelson just mentioned in that example we talked about. So we're going to take a loan from the bank against those items and make those purchases. From there, what do? Well, we have to make those payments. We have to make those repayments, and that money is going to go where? It's going to flow back into the bank. Well, the bank now has more money. What does the bank say that they want to do with that? And what do we just learn? That money has to flow. So the bank's going to find other people that need money, and it's going to make loans to those individuals. And I'm not simply talking about your average person, and some of them are, right? Some of them are those individuals just like yourself, but there's also other small businesses. There are entrepreneurs. There are different people that also need that money. Well, they also make repayments. And when they make those payments, the bank again is getting another influx of money and it's flowing back into the bank. The bank says, where are other people? We need to move this money and keep this money in motion so we can continually keep making money. Well, those people also need to make repayments. That money's going to flow back in. Now, in this whole process, the bank's going to acquire additional customers as well. So they're going to deposit their earnings, their money as well back into the bank. Well, what's happening here? Well, the bank has a lot of money flowing back into it. It needs to put that money back to use. So it's going to generate more loans. And again, this is where thinking like a banker will become a little bit more important for us. So why does the bank always want to make these loans? Well, let's start thinking like a banker. First and foremost, to think like a banker means we have to redefine some terms and kind of redefine our own mindset about what these terms are. First of all, to a bank, deposits. So when you make your paycheck and you want to take that money and you deposit into the bank, guess what? The bank doesn't see that as an asset. You might, but the bank sees that as a liability. They see loans as assets because that's their income source. They're making money on every one of those loans that gets placed into the market. From there, we have to think about what's attached to those loans. So when we think about our own situation, maybe your own individual time that you've taken a loan from a bank, you had to put up collateral for a loan. And sometimes that collateral is the item being borrowed against or borrowed for. And sometimes it's a different piece of property. So it's your own personal property that you're putting up as safety for the bank in the event that you default on repayment of that loan. Now, additionally, and those of you who are homeowners are familiar with this, and even those with vehicles, there's also liens. That lien is essentially a first claim against your property when you lend from a bank. So this is how the bank ensures that they get that property first before you in the event that there's something that happens, such as a default or you're unable to pay or there's an insurance claim and there's money at stake and there's still money owed on the vehicle. They get that money first. That's how they make that happen. Thinking about that, again, if we rethink our thinking and we want to rethink our thinking like a banker, we have to start thinking differently if we're going to create this process and we're going to start thinking about how we can make our own bank. We have to change our thought process. We have to change our understanding of concepts. If we have a bank, we have a place to put money, and we need to put that money into our system first and foremost, so then it can then flow back out for us to use in different ways. So if we're going to rethink our thinking like a banker, we have to start thinking about, number one, we have to have a place to deposit that money. So in the case of becoming your own banker, in the case of implementation of the infinite banking concept, like we teach here at Perfect Spiral Capital, we are going to be using dividend paying whole life insurance as that sort of bank, if you want to call it that. But that's really the product that we use as a portion of this process. And in that process, deposits to our bank are really premium. And that premium is going to grow the capital capacity of our bank. And not only is it going to be kept safe, being that insurance is a extremely safe place to put our capital, but it's also going to continue to grow and begin to get put to use. So that as we deposit more and more premium into that bank, that capital means that our bank can then lend more money, and your bank can lend more money for the different things that you need in your lifetime. From there, by implementing the infinite banking concept, it gives each dollar that we have more jobs. If we think back to the example I just provided, one of the things that we saw is our money only had one job, and that was going into the bank and then flowing right back out to make payments back to the bank. Our money didn't have more than one job. In this case, by creating our own bank, our money gets multiple jobs. One of those jobs is that each dollar is going to go buy $3, $4, $5, depending upon, the type of health and rating of an individual or what have you, in death benefit. So it's automatically going to be expanded that way. Separately, that money is going to be put to use within the insurance company in that it's going to grow on a contractually guaranteed basis. Not only that, the company is going to be more successful as a result of us doing this process, and it's going to become more profitable, and that's going to flow back to us in the form of dividends. So again, those dollars are being put to use in multiple ways, and it's allowing that capital capacity to grow, even just by paying the premium only, and that's it. Now, from there, what are we seeing? Well, money in motion is creating growth. So as we've implemented this process, and let's kind of move on to that, let's talk about implementing the process. We are going to have to reference Nelson's book. So let's think back to pages 21 through 27 of Becoming Your Own Banker. We talk about capitalization. We talk about creating the entity. And what we're doing is we're creating this bank. We're creating this process, or the beginnings of the process where this money can flow in and from and to. So when we first start out, we're going to see that money is typically going to flow in multiple ways. It's still going to flow into our housing from our our livelihood or from our income. It's still going to flow into some of our living expenses because we have to start somewhere. We have to start at the beginnings, but it's also going to flow, from our income into our bank. And first and foremost, from that bank, we can then begin to take, borrow from our bank and purchase automobiles. We can borrow from our bank for some of our living expenses, making those loan repayments. We're going to allow the bank to put that money in motion, and that money is going to grow and become more effective within our own system. We're going to get multiple uses from those dollars like we just talked about. Now, as our thinking grows and expands, as our bank expands in terms of its capital capacity, in terms of the amount of money available, well, guess what happens? Now we can start to change that process a little bit further. Instead of our livelihood generating income only, or taking our income and applying it into multiple areas, we can first funnel it primarily into our bank. So virtually all of our income can flow into our bank first. Then from there, it can flow out to our housing. Then from there, it can flow out to living expenses. Then from there, it can flow and purchase automobiles. And now something that's really important here is now we have the opportunity to think about investments. Saving and investing are not the same thing. Saving is a safe place to put capital so that it never goes down in value. And in this case, when we're talking about dividend paying whole life insurance with a mutual company, that money is contractually guaranteed to always increase. So from there, we can then put that money to use in an investment. Maybe that investment is buying a business. Maybe that investment is buying a rental property. There's different ways to go about it. One example in our own family bank is my son is considering purchasing a CNC machine. It's something that we've talked about, where he maybe wants to start a woodworking business. Like, these are all real things that people can do that you have to have a place to start from. If I'm constantly going to a third party, I'm losing out big time because I'm repaying all of this interest and it's not coming back to me. If I'm making payments and I'm using this system, guess what? That money is coming back to me. It's coming back to this system. And I want that for you. And that's really what we try to teach here at Perfect Spiral Capital, is about how to educate you to be able to recapture the money that's already flowing through your system and put it back in a way that's going to allow it to grow, in a way that's going to allow it to expand and help you take that next step forward in your life. Maybe that's in the form of investments. Maybe it's in the way of starting a business. Lots of different ways to be able to put that to use. That's why it's called an infinite banking concept. It's really up to you. You have the opportunity to make it what you want. So what do we learn here today? In wrapping up, we learn that banking is about the flow of money. It's controlling that flow of money. It's not something that is simply a checking and savings account. There's a lot more to it. Secondly, we have to rethink our thinking. We have to think differently about what the banking process is, about what assets are, about what some of these things are that we face in our lives. Thinking differently about what a loan is and how that loan should work. Thinking differently about interest, and that interest to a bank is money. It's money flowing back into the system. And we have to kind of think differently that way too. Hopefully you learned something today. And if you did, feel free to like and subscribe at the links below and in the show notes. And check out our channel for even more educational videos that will help you expand and explore your understanding of the infinite banking concept. If you want to understand even more, or you want to learn a little bit more, feel free to contact us. We'd love to chat with you. We'd love to see where you're at and see if implementing the infinite banking concept is right for you and right for your situation.